Now let's discover the flow day trading strategy. And the general idea is fairly straightforward. So this is a day trading strategy mostly executed on the 5-minute time frame, or pretty much exclusively. And we are focusing on trading the London Open and or the New York Open. And this is generally a trend following trading approach. And the premise is pretty simple. What we're doing is that we want to see a trending phase in the Asian session. And if we have a trend in the Asian session, then we are waiting for the London session to open and we want to trade a continuation into the same direction. Or other traders who want to focus on trading the New York session, what they are doing is they are looking for also a trend, but this time during the London session. And then we are looking for continuations during the New York session, again in the same trend direction. For trade parameters, we are typically, when it comes to entries, using a breakout approach. So we are waiting for a small correction wave, a small pullback. And for that, we are also using the 13 and the 30 EMA to analyze the pullback. Stop loss, very straightforward in the beginning. We are just putting it above or below the breakout candle. That gives us the entry, or we can also use the EMAs. We are also going to start applying a trailing stop loss approach. So we can combine or we can test a passive approach where we don't do anything with the trade, or we have a trailing stop loss approach with an open-ended target. We can also work with break-even stops. And then when it comes to exit, either the trade is hitting our target. If we are using a trailing stop loss approach, the market hits the trailing stop loss, or as day traders, we can also implement an end of day close, an end of weekend close, or end of week close. And also we want to get out before news. This is very critical as day traders because if we are trading on the 5-minute time frame and then we are trading into a big news event such as FOMC, interest rate, inflation, NFP, this can really cause big issues for our trades. So let's take a look at the classic or the perfect trade scenario. What we have is here the Asian range. The blue area is roughly where the Asian session is trading, and we can clearly see the market has been moving higher. So we are looking for a trend. The trend is unfolding both above the 13 and the 30 EMA here. And then here you can see the green box. This is where London is opening. We are now having an interesting consolidation pattern, right? The market made a double bottom. We didn't penetrate the moving averages. This is something that I also going to pay a lot of attention to during the back test. Of course, there can be pullbacks which penetrate the moving averages. However, in an ideal world, we want to see that the moving averages don't get penetrated too much and don't get violated too much. Because what does it tell you? The more the market is able to push through the moving averages, the more profit taking there could be from the bulls, and also more sellers could come into the market. What we want to see is something like that. The market does make a pullback. The pullback is finding support rather quickly. And then here we have a very nice high. And the trade criteria, the trade signal is very simple. We get in on a breakout during the London session. So London must have opened. We don't trade before the London has opened. And we want to see the market break through previous resistance in this case because we're looking for trend continuations. Sometimes we can also use flags. Sometimes we have patterns with multiple resistance touch points. But in this case, we have a single resistance. We have a double bottom, then the breakout candle. Stop-wise, we can put it underneath the breakout candle. In this case, this would be very close to the breakout level. And then we have also options to move the stop loss to the moving averages. This way we can play it a little bit safer. Then you can see the market moves higher. Target-wise, we have a lot of options. And when we do the back test together, I will show you and we will test different back stop loss approaches and target and trailing stop loss approaches. So I will come back to the target in a moment. Then you can see during the London session the trend was continued. Now you can see the gray area here, the gray box. Not sure if you can see it. This is where New York opened. So this is the New York Open, and what we have is an Asian trend. We traded a continuation during London, which is also a trend. And because the London session was also a bullish trend, we can keep looking for a bullish continuation during the New York session. Again, we only look for entries during active London and during New York sessions. Here in this case, we do have a little bit of a penetration of the moving average, but that's nothing worrisome. We don't push into it too deep. We have a very nice pattern here. We have triple resistance. We have kind of a lower bounce. And once again, a strong breakout candle. Stop-wise, in this case, you can see the moving averages fall right at where the close of or the low of the candle would be that is breaking out. So in that case, I think the stop loss is a little bit more straightforward. Then you can see the trend continued during the New York session once again. So the most important thing is that we trade continuations. So we see, is the Asian session a bullish trend? Then during the London session, we trade the continuations. Or if the London session has been trending, then we can also trade a continuation during New York. We only make decisions during the trading sessions. We don't trade off hours. We only trade when the market is open. Ideally, what you can also do is have a rule. You only want to look for entries in the first maybe 1 or 2 hours of the given market. And you don't want to get in when the session is already getting very late. That could be another rule. So important to recap, we look for trends during the Asian session to trade the continuation in the next session. The pullback before the entry should not violate too much the EMAs. Here you can apply some discretion, and there can be periods when a penetration and a violation of the moving averages are okay. We'll cover that in the backtests. We want to avoid trades during the news and also getting into a trade before the news. As a day trader, this could be really, really deadly. And because we are using small stops with a relatively large position size in terms of lots, a stop run and a gap through our stop loss based on a big news spike could wipe our whole account. So it's very, very important that we never, ever are in a trade before a news event is released. This is the #1 rule, and this cannot be broken. And you have to check your news calendar at all times. Also, you want to find a pair that moves during your trading hours. So depending on where you are in the world, you want to find a market that moves during your session and also during the previous one. That's why you're going to see me backtest the Euro-Yen, because what we are often seeing is that the yen moves during the Asian session, and then we can look for continuations during the London session. But obviously this a little bit depends on your time zone. We also want to focus only on the major Forex pairs, because on a 5-minute time frame, the spread can really make a difference. And when we're doing the back test, we want to test it on at least 3 to 4 months of historical data, which we're also going to do. There is also the alternative to trade an advanced approach of this strategy, which is a narrow range breakout. So what we do is, instead of looking for an Asian trend, we look for a very narrow range during the Asian session. And then we trade breakouts rather. So here you can see the Asian session is very, very small, very narrow. And then we look for a breakout into either side and we trade the continuation. It is very important that the range that you are seeing during the Asian session is really narrow, not a lot of volatility. Candles are small, we don't have fake outs, and we are trading in a very well-defined, very narrow band. Wide ranges are not recommended because then you have often a lot of volatility. You really want to make sure that you trade narrow ranges. This is the most important criteria here to begin with. We have the breakout and the retest. You can see we are breaking and retesting the previous Asian low. Asian low and Asian highs, as we will also see during our backtest together, are really, really important reference levels on our charts. They are often respected, they are often tested. So you want to make sure that you trade and break and retest the Asian low. In this case, we not quite touch the moving averages. Sometimes you will, but you want to make sure that something is retested. And then you can see we retest the Asian lows and then we break into a new low. Very important, you want to see the market make a new low. And then stop-wise, again, we can put it above the breakout candle, but in this case, we can protect the stop loss nicely behind the support level and roughly at the moving averages. Then you can see the market moved lower. Here is UK news coming out. And since this is on the British pound US dollar, you can expect some big moves if this is in high impact news. And we definitely want to be out. You can see the market is so close to our target that it doesn't pay off gambling. There's only a little bit more that we can gain, and there's a lot more that we can lose. And high impact news, we should never gamble with them, or we should never gamble around them with our trades if we are trading a day trading strategy. So next, what we are doing is that we will do a back test together on different periods. We will go through different months and maybe even test 2 or 3 different markets. And I will try to do my best to perform the backtest as if I'm backtesting this strategy for the first time, because I want to show you my thought process and I want to make it as realistic as possible, so that when you want to develop a new strategy and when you are doing the backtest for the first time, then you can get more out of it and you can see what I'm doing, what I'm paying attention to, and I will try to share my thought processes as detailed as possible. And also there will be a final video after the backtests about the flow strategy, where I share the final results and also some thoughts on how to go about trading or implementing or testing it in your own trading.